I wanted to explain the VWAP, that's the volume weighted average price, and I just wanted to make you aware of it because your competition uses it. And by that I mean the floor traders. It's a very effective, it's a good tool. We don't use it in this system simply because it doesn't follow with the basic parameters of our system. Yes, it is highly visual. You can see it on real clearly when you display it on a chart, but it doesn't abide by the keep it simple plan that that we just mandated for the system to operate effectively, so that it could be easily explained, items could be easily understood, and the very nature or attitude of the system, in that it was simplistic or basic in nature. That being said, this chart right here I have is a 1-minute chart, and I just opened it up here. Looks like about 20 or 30 minutes after the open. I'm sharing you back here behind on the previous day to show you that it's flat. And right now you can see that the 20 moving average is the green line, it's going down, and the VWAP is the cyan line. And the VWAP is calculated by adding the dollars traded for the average price of the bar throughout the day. In other words, you know, your average price times the number of shares traded per bar, and then dividing by the total shares traded for the day. And so you can see that last part of it, when you divide the total shares, it just keeps dividing. Well, the line gets flat. And so I wanted to show it to you here on a 1-minute chart in the first few minutes of the trading, to show you that it moves around. I've seen them jump all over the place in the beginning, depending if you have a lot of volatility. But it isn't long, an hour or so, sometimes sooner after it starts, or after the market opens, the VWAP just settles into a flat line. And it can, depending on how all the trades were per the day, that line can drop, you know, a penny here or a penny there, and it does it slowly because, again, you're averaging over the total number of shares, or, you know, you're dividing by the total number of shares traded for the day. So it just, I mean, you can see where mathematically it just becomes a flat line. The VWAP is used by floor traders. I'm going to give you an example. A hedge fund comes to a brokerage house and they say, excuse me, we want to sell 7 million shares. So the brokerage house creates a deal with them you know, at a certain range, or however they want to, you know, create their situation. The brokerage house obviously wants, if he's selling, obviously wants to get the highest price. And so the brokerage house offers or suggests to the hedge fund that if they sell it at a much higher price, that we could incrementally give a bonus to the floor traders themselves, because they're the ones that are pulling the trigger. And so the VWAP is I mean, it's recalculated. The exact formula for how it's recalculated is up to everybody involved. It could be done on a 5-minute chart and recalculated each hour, and it's recalculated because, as I said, it just goes flat. And so you have to, you know, those bonuses need to be determined based on the new recreated VWAP in the next, or for the next hour, or as you're going through the next hour, maybe more appropriately said. But if you want to go long, the average price would be lower than the VWAP. So in other words, if the hedge fund came to the brokerage house and said, I want to buy 7 million shares, then the floor trader, if they bought shares, like right in here where we're looking at, right in there, all of these candles are under the VWAP on the 1 minute chart right now. And so by buying down in here, they would get a bonus because it's relative to where they bought from the VWAP line on the 5 minute chart at that point of sale. And so, and that bonus that the floor trader gets is created initially by the initially by the brokerage house in its discussion with the hedge fund manager in determining how the brokerage house would get paid. The brokerage house splits some of that money with the floor traders by giving them a bonus, and the hedge fund comes out better if they sell it above the volume weighted average line. So that's how the VWAP works. That's what your competition is doing. When we're out here making a decision on a buy-sell, it's a profit-orientated situation, and we do things for the bottom line. A floor trader makes a decision based on a candle position from a VWAP line. They're used every day, all the time by floor traders. That's how they get their bonuses. And so it's we don't use the VWAP. It's a line that, you know, you look at it and you say, oh, it's easy to understand, but to get to redo everything, and it doesn't follow the basic principles of the system that we've put together, because we're trying to keep it a system that operates real easily. We don't complicate matters. The VWAP obviously is highly visible as well, but that doesn't mean it's a system or an indicator that we would use, because it's really irrelevant to whether, you know, you buy it under the VWAP or above the VWAP when you're trying to buy and sell for profit, because everything is based on your entry point if you're in the position. And so, you know, are you above the entry point or under the entry point at this point? That's the decision you make. So it's information for you to keep in the back of your mind. It is a very effective tool, but it's for floor traders, not for what we're doing.